Welcome back YouTube. So this is gonna be another video explaining why I took my entries on gold today morning and how you can use iCC to help you out with your trade positions. Most of you guys have questions like where do you take entries on iCC, where do you put your stop loss, where do you put your take profit, all that. So I just put the trade history in the chat so that you guys can observe. Okay, so over here, if you observe, I took my entry for a buy over here and I held it for some good time before I closed out. So why did I take my buy entry from this area over here? Okay, so this is the area where I entered my position, and then afterwards price pushed up. I closed at around some few pips. I closed at around here. Okay, this is where I closed, and then after some time price pushed higher. But anyway, let me show you why I took this entry and how you can also manage your risk while taking these entries. So the first thing that I did, let me first remove the trade history so that we can have a cleaner shot. Okay, so the first thing I did, I went to my H1 to see where structure is, where the most market structure is. Okay, and from the H1 perspective, I realized that previously price was buying. We had a bit of a higher high over here, and then we had a higher low over here. Okay, then price also came, made a higher high over here, and then afterwards it made a higher low, and then afterwards we had a higher high. So the higher high was over here. What happened next is that price showed us the indication that above this level, because previously above this level price was bullish, therefore the same thing could happen again because price repeats. It has a high probability of repeating the same thing it did. But anyways, I was taking my buys. The entry was above this level, so anything above this level was good for buys. My TP was above that area over there, but I just held just a few minor pips, then I closed out because I had placed a big lot. Therefore I was satisfied with my profit. Okay, so if you put a big lot, for me I'm always satisfied with the profit once I have a big lot. Okay, so anyways, I went to the M15. Remember, anything above this level, anything that comes above this level here is good for buys. In iCC we call it the indication move. So if we have anything indicating going above this level, is good for buys because we have seen it before happen and the TP was always there up. So that's why I took my buys here. So I waited for price to show me an indication that it wants to go above this level. If you observe, all these candles were throughout the London session. There was no volume in the market actually. Price was just consolidating. Okay, then coming to the New York session, that's when we had this massive push to the tick pre. Okay, so I'll break it down guys for you. So we go to the M15 because first of all, as I've told you, you go to the H1, find out your zones, mark out your zones, see which zone is good for buys and which one is good for sells. So we see that anything above the swing high is good for buys. So anything that goes, whenever price goes above the swing high, we know that we're going to start buying. Okay, so you scale down to the M15. On the M15, let me even remove everything so that you guys can see it clearly. Don't remove, but just zone it out. If you observe, this was the previous structure in the markets. Price was pushing lower at this area. Okay, we see that anything underneath this area was good for sales. Okay, so anything, whenever price came underneath this low, we had sales. But remember that price, I don't know if you can remember our zone. Let me just show you our zone again on the H1. Let me just draw a straight line so that you guys can follow along. Okay, so if you observe, anything above that level is good for buys. That is the first indication that we had of price. Therefore, when you go to the M15, you want to see price come above that level once again. And what did price do? As I've told you, underneath this zone price was selling, but the moment price went above this level, okay, the moment price went above this level, and now my mind clicked because it's like price could have the potential to push all the way to the top. And the funny thing is that if you go to the M5, you can even see the picture even more clearer. We see that previously price was making lower lows. Okay, so this was the previous low. Okay, and then this was previous lower low. So price was making lower lows in the market. Okay, it was making what? Lower lows. But then all of a sudden price broke structure. If you observe, above this level price came and pulled and broke this structure on the M5. That was the first indication that price was what? Price was bullish. So we waited for this consolidation to end. Then after some time, price came above this level. So once price came above this level, I was already in the bias that price is now going to start pushing higher. That's why I bought over this level. without even hesitating, because my stop loss, if you observe, I'd put my stop loss just underneath this low, because this was the previous level of support that the price found before we broke structure above. So most of you guys will be like, where do I put my entry, Kevin? Where should I place my TP? As I've told you always, if you go to the M5, you find out that if price breaks this structure over here, we're not good for buys. Okay, once price breaks this structure over here, we can shift our buys from bullish to bearish, because you know that anything underneath this swing low is good for sales. So what did price do instead? Price went above and created a new higher high. That means that this level of support is strong. When you have a strong level of support, that is the first stop loss that you can put in the market. Okay, you put the stop loss. Remember, your entry is just above here. Okay, so you put your stop loss underneath, and then the TP for this trade can be anywhere to where we have. If you go to the H1 again for TP, you observe that the TP for H1 is always going to be at this area of where we had sellers kick into the market. If you observe, sellers were strong above this level, okay, because at this level sellers were able to push the market all the way down to here. So if price finds enough support, if price finds places where there are buyers, it's likely to also do the same thing and see whether these sellers are still active. When the sellers are active, we shall have a change in character and price will continue pushing lower. Why do we say that it's a change of character? Because we know that price would have the sellers up here would have pushed the price even lower. As simple as that. So what do you do when you find such a situation? Well, as I've told you over and over again, you go to the low time frame. The M5 is good. We see that price is making what? Higher levels of support. This was the first level of support, this was the second, and then afterwards, if price manages to cross the second level of support, then we know that price is likely now to start selling, because after we break this level of support, that's the first indication. But you have to get the indication from the H1. I don't know if you guys follow along. You have to get your indication from the H1, not the M15, not the M5, not the M1. You have to get it from the H1 and above. Why is this very important? Because on the higher time frame, you have the higher probability for price to continue with a trend rather than the low time frame. M15 can give you a fake out any moment in time. Let me just show you an example. If you go to the M5, what do you observe? On the M5, let's say you are trading over here. You see that price made the level of support over here. What did price do? Price came and broke that level of support. Okay, it broke that level of support. So in iCC, all we are waiting for is for price to come underneath and then we sell. Well, price did the same thing, but overall it was some bit of a fake out. We never had any momentum push to the downside. So what does that mean for us? It means that if you were patient enough, you would have caught the buy entry when you had all the confluences in your favor. Okay, that would have been the time for you to take the buy entry. Let me first remove all this so that you guys can understand it as clearer as possible. I don't want you guys to miss out anything. Observe, okay, from the H1 perspective, as I've told you, if you go to the H1, realize that anything above this level is good for buys. Why? Because we had swing lows in the market before price started to form higher highs. Okay, so anything above this zone is good for buys. You don't have to go back in time like 3 or 4 years back. No, just look at the previous price action and then use it with to your advantage. Okay, we see that whenever price went above that zone, we had a push towards this level of we had a TP up to this area here. This is where the first sellers took their entries. Okay, so knowing that in mind, what do? You go to your M15. You want to take your entries. You want to be like that soldier who goes and takes his entry. Okay, so where do you take your entry? That's the good question. You take your entries when price gives you the confluence. We have seen that whenever price went above this level, we had the momentum to push towards this TP here. So once price pushed towards that level, we know that the second time it also pushed towards that level, and we see that price has indeed pushed underneath up to that level. Okay, so that would have been some good TP. If you observe, this is like 1 2 3. That's like 45 minutes of waiting, and you'll have hit your TP. Simple as that. So now what do you do next? You want to see if price is able to now start selling. When do you know that price is going to start selling? You go to the H1. the H1 should give you an advantage in the market because it's one of the few time frames where you can day trade as well as see the overall market structure. If you go to the H4 and the daily time frame, you won't see much because the H1 will take lots of time. Sorry, the daily will take lots of time. But from the daily perspective, let me just give you free juice here. See that price was selling underneath this level. Okay, there was heavy selling underneath this level. But what happened? Price came and actually started to push up. Okay, so this was the first indication that price wants to buy. So after that indication, what would we have done? We would have waited for price to make a correction. A correction can stop anywhere. The issue that most of us have is that we're not patient to wait for the correction. You want to trade the correction as well as the indication. No, you have to wait for price to show you the indication, and then afterwards we wait for price to show you the correction move, and then afterwards you know that anything above this level is good for buy. So whenever price came above this zone, we bought. As simple as that. That means that the second time that price comes above this level, we are going to buy, and we shall hold price until we hit the first TP there. So that is my indication for the whole day. I know that if once price goes above that level, I'll start to buy, and as you can see, once price went above, you could have started to buy right away. So with that in mind, the higher time frame will always give you better entries than the low time frame. Why? Because the higher time frame follows structure most of the time. If you observe also here, we have a level of support. If you observe here, we have a level of support. So what would have been the indication that price wants to sell? We saw that price for the first time came and broke underneath this level of support. Good, that's an indication. What do we want to see? We want to see a continuation pattern. By continuation, I mean that price should come underneath this level the second time, so that we can get a confirmation to push even lower. But price never did any of that. It came underneath for some short time, then decided to push higher. So would have been stopped out on this trade, but at least would have gotten the idea that price now wants to start buying by having a new indication. So iCC isn't all about a single direction. You don't have to keep your mind locked up in a single direction. No, iCC is about following the structure. Once we break structure, that means that price is showing you that, hey, I'm willing to buy, I'm willing to sell, I'm willing to, it's giving you the signs. We call them signs in for people who have been trading for long, we call them signs. But if you go to the M1, what do you see on the M1? Price is bearish. Okay, price is selling. We have seen that price is now starting to sell. It was a new lower low in the market. Price took it out. Okay, so all we have to do right now is simply wait for price to turn bullish. Where does the price turn bullish? Whenever price went above this level, we see that price was turning bullish. But now here is a crucial mistake that most of you guys make. We are not waiting for price to do its thing. Okay, so when you don't wait for price to do its thing, you start to buy over here. Most of you guys start to buy over here. You start to enter in your positions here, knowing that price can potentially push up to the top. That's a mistake that most of you guys are making. You have to wait for price to give you the indication that it wants to buy. By going above this level, then you can start to position yourself in such a way that you can hold your entries for buys. But so far we have seen that price does not want to sell, does not want to buy, because we have broken the first level of support on the M1. So we go to the M15 so that we can see it clearly. Like M15 is only one single candle. Okay, on the M15 is only a single candle, so there's not too much information. But from the high time frame, so now we have started to go above the level. So now I can take my entries. Why am I taking my entries? Because I've seen that above that level, price has been extremely bullish. But I won't risk too much crazy simply because I want to get as much capital as possible. No, I have to be patient. Price is showing me direction, but I don't have to just simply enter blindly. I am patient. Okay, price is showing me that above this level we are buying, so we shall hold price there, and then TP is gonna be at the top here at $127. As simple as that. If price manages to reach that area, we shall close, and then we shall have a TP hit. But yeah, that's it, guys. That's it with iCC. iCC is all about indication and then continuation. As simple as that. If price goes underneath this zone, for instance, let me just show you. This will be a $123 loss. So if price goes underneath that level, I'll be happy to actually exit the market, because it has shown me that whenever price was above that level, we had some indication that it wanted to buy. So let's wait and see what price gives us. But on the H1, as I've shown you, price is starting to be bullish, and we are expecting some momentum push to the upside. But if price fakes us out, we shall find another entry. As simple as that. But yeah, that's it for gold. I'll do my analysis more. If you guys want more videos like this, please make sure to subscribe, and I'll be showing you guys how to actually trade these markets using the iCC method. iCC was developed by Trades by Sai, and we're just doing what he did. Okay, we're just doing what he did. So with that said, let's keep the energy flowing, and I will see you guys in the next video.